Where most investors are anguishing that they're holding on to positions when the market has done this, as a candlestick investor, it would be much more comfortable, or it is much more comfortable, to know that when the indexes showed sell signals and a close below the T line, that was a high probability situation that you should be closing out long positions and adding short positions. Does that necessarily mean when you started shorting that maybe this was your expectation to come down here versus being lucky enough to participate in this move? Definitely. But what is more important is that this type of move can be participated upon based upon this telling us we should be out of long positions and going short. We might have covered short positions here had there been buy signals, but this is not an uncomfortable position, obviously, for being in short positions. This is where now, instead of anguishing that you've been in the wrong direction, the candlestick signals provided the information you needed to tell you this was a change of investor sentiment, go short, and now you've been able to participate in the appropriate price move. The same scenario was attributed to the change of investor sentiment in the NASDAQ. There's your kind of your hanging man signal, close below the T line. Just the fact that you had a hanging man signal in the overbought area and it opened lower, that's the first sign of confirming the hanging man signal. The fact that they traded back below the T line and even traded back below the low of this candle was further evidence that the hanging man signal was confirming. This allows the candlestick investor to be making their changes, closing out long positions that were looking iffy or weak, and looking for short positions that should be profitable, coming down either to this level or this level, but also having the opportunity to participate in moves of this magnitude. The positioning of the portfolio becomes very easy. If you can see with simple scanning techniques, stocks that are starting to roll over, and as we see, and when we shorted our NCHL, one of the Norwegian cruise lines, because it was in the headlines and it was showing weakness. Did we anticipate this type of move? Heck no. But down here with a doji in the oversold area, it was starting to show possibility of reversal that far away from the T line. That was a good time to start taking profits. Same scenario on Carnival. There's your little bearish flutter kicker signal. Failure at the T line. You can start shorting on this day because the doji rule, if you're below the T line and you're starting to roll over, if they open it lower, the doji rule says it's going to move in that direction. Another one that's had a very nice strong price move. This is not difficult analysis. This is merely analyzing what the market is ready to do and finding the best bearish situations in that market. When the market is trading off as hard as it is, are there any good bullish charts? Obviously, yes. And if you're looking at the story stocks, the stocks that are going to benefit from what's knocking the market right down, or knocking the market down right now, which is the virus situation. APT had this fry pan bottom breakout. Now, was this something to go after when the market was cratering? Yes, because we knew that this was probably going to be affected positively by the negative virus news. This puts you in situations where when it's breaking out of a fry pan bottom, allows you to participate in these big price moves. When do you go after these big, huge moves? Well, you don't just chase them, you find the nice patterns. Obviously, another fry pan bottom breakout in Lake, which also makes rubber gloves. So, using the candlestick scanning techniques to find which ones are moving, And you can see that it's all in one category or one sector, such as the stocks that are going to be benefiting or having to supply people with different products during the virus scare. That allows you to make much better decisions of which stocks to go after on the long side. Our recommendation on VIR was merely based upon the fact that we had buy signals in the oversold area right off the 50-day moving average, and they started gapping it up. Again, putting ourselves in situations where the profitability is extremely large. This doesn't take rocket scientist mentality. This is merely analyzing the investor sentiment, building up in chart patterns that we can take advantage of, and also knowing what the story is behind those. You will notice in all our analysis that the T line, this black line, the 8 exponential moving average, has an extremely high probability trend result. If you see sell signals and a close below the T line, it's still in a downtrend. If you start seeing sell signals and gapping down through resistance levels, pretty much tells us we have a wave 1, wave 2, wave 3. All this is based upon the simple probability factors from resistance and support levels like the T line and the effect of candlestick signals combined with that information. This is why we made huge profits in what everybody else is thinking is a bad market. It's a great market if it knows, or if you know, which direction to be in when these market conditions occur. That'll be it. We'll see you in the chat rooms.